Welcome, guys. Happy Wednesday. I think it's Wednesday. I lose track of the days at the moment. It's September 2nd. I know that. So happy September 2nd to you guys. Welcome to the pre-market overview for today. For those that have never joined me before, just to introduce myself, my name's Becky. You can get me at becky@tradewithufos. If you have any questions about what we covered today, you can email me. There's also the support team. In fact, the support team are usually better to get because they're a team, so they're often quicker at responses. So that email address is support@tradewithufos. You can get those guys on there. So again, for those that might be new, that might be joining us on YouTube or one of the streams, just to explain to you what it is that we do, what the pre-market overview is. So you'll see here that we have a newsletter. So the newsletter is sent out every single day, Monday to Friday. And in that newsletter, we go through 4 of the major markets in the world. We basically look at trend, we look at where price could turn, volatility, news, as well as probabilities associated with the movements that we expect. So a lot that we go through in the newsletter, it's a 2-page document. So we do this pre-market overview to just expand on it a little bit, explain it in a little bit more depth for you guys to understand what we mean and how we came to those conclusions and the technology that we use. So if you want to get that newsletter for yourself, if you email us, newsletter@tradewithufos, we'll be happy to put you on that subscription list and you will get the document for yourself every day. And then, of course, we do these to explain them as well. So for those that would be joining us from within the Tradewith channel, welcome. Today is Wednesday, so you have futures and options today in your sessions. Futures at 9 a.m. and then options at 1 p.m. Eastern. So we'll see you there. Again, just a reminder, you have stocks and investing Tuesdays and Thursdays, and we have sharpening sessions over the weekend, one of which is a psychology session and one of which is a reinforcement session for the methodology and for concepts or theory, Q&A, those kind of things for you guys to get the concepts a little bit more. So in terms of upcoming classes, we have a few coming up. The next one is mid-September. That's the backtesting class. After that, we have futures, then stocks, psychology, and trading plans. So those are the 5 different classes that we do. You can go to the website to learn a little bit more about how they work, what we do in them, what we cover, who teaches them, and those kind of things. Okay, so I need to put the disclaimer there on the screen. I won't read it. It's a long disclaimer, so it'll take me a while to read, but you guys can obviously mute me if you'd like to read that, or you can come back later and pause the video and read it. It is important that you read the disclaimers. I would say it's probably better to go to the website, www.youcantrade.com, and you can get all the disclosure information on there. In a nutshell, what the disclaimer is saying is that there is obviously a risk involved in trading. You need to be responsible for that risk when you take trades. It is up to you what money you put in an account, whether you trade live or sim, that's on you. Everything that we show is investment, educational content, ideas and demonstrations, not trading advice. Okay, so a little reminder here. I'm glad that popped up, or I would have forgotten. We have a app, a You Can Trade app, downloadable on the App Store. So if you've got an iPhone, you can get it on the App Store. Okay, so now that we've done that, let me just close that and let's go and look at the newsletter. So the newsletter on the right, that's what we send out every single day. Obviously today, today's date is up there, and we see here that we have 4 of the major markets in the world. So we have the S&P, which is one of the major equity indexes or indices in the world. We have oil and gold, both major commodities, and the euro. The euro is when looked at as the euro US dollar, is the highest traded currency pair in the world. In fact, spot Forex is the largest traded market in the world. So lots and lots of volume goes through just that one market at the bottom, let alone 2 major commodities and one of the major equity indexes as well. So lots of volume is covered in these 4 markets. You might not trade them specifically or directly, but I'm sure what you trade will be at least correlated to one of them. You'll also notice as well, we go through a daily time frame for each. Of course, different things happen on different time frames. So if you trade in smaller time frames or higher time frames, some of these things will be different. But the daily does seem to fall within what most people do. Whether you're a short-term trader or a long-term investor, the daily is something that is used quite commonly, hence why we use it for the newsletter. Now, for each of these markets, we're going to go through climate, which essentially tells us in what direction is the market moving, what trend are we in, but more specifically, what are the probabilities associated with that. We also want to understand propagating, meaning what normally happens for a market going in that direction. So we see on the right-hand side, this tells us what normally happens. So how long those markets normally go up for or down for, obviously relative to wherever we're at now, whether we're going up or down. And then on the left-hand side, we see where we're at now relative to that. So from these two numbers, we can get an idea of what the statistical likelihood is of seeing a continuous move to the upside or the downside based on what normally happens. So again, it's using probability, statistical advantages there in our favor. We use the AutoClimate app, which is what we see here at the bottom of the chart. We use that for our AutoClimate and propagating. That's where we get the information from. We then want to understand nearest UFOs. So UFO stands for unfilled order. What that means is where we expect there to be big stacks of buy orders in the market that could push it up, big stacks of sell orders in the market that could push it down. And we use our Auto UFO app to highlight these on a chart for us and give us those areas on a chart where those markets, where those orders are likely to be. So we see them here. These are our green UFOs or buy UFOs, and red ones will be sell UFOs. I'll show you those in a second. So we want to go through each market. We will go through each market and have a look at what the charts are telling us here, what the technology is telling us. Again, it's using technology to give us probabilities. Just because something is probable doesn't mean it's definite, doesn't mean it's definitely going to happen. So of course we manage our risk just in case we're wrong. But again, it's always just about us putting as many odds in our favor as we can and using technology to help us get those probabilities in the most objective way possible. So for each market as well, we're also going to come down and look at volatility. So volatility just means how far we expect these markets to move within given periods of time. We have our current implied volatility numbers. Now you'll notice each of these is a percentage. So what these numbers mean is the expected movement up or down in 1 year as a percentage of its current value. So it's the yearly expectation, the annualized expectation of movement up or down as a percentage. From that, we can then figure out, we can reverse engineer it and understand what we expect up or down in a day in terms of movement, what we expect in a week, and what we expect in a month. Again, these numbers give us the movement up or down that's expected. Okay, so we're going to do that for each market. Then we're going to come down and look at news that we need to be aware of. So let's start with the S&P. So what we've got here over on the left-hand side, we have our AutoClimate at the bottom here. Now, the AutoClimate app will show us one of three things. It can either be a thick blue dot that tells us we are in an upwards climate. We have probabilities to the upside because it's a thick dot. It could be a thick red dot that tells us we're in a downwards climate, downtrend, probabilities to the downside because it's a thick dot. We could have a thin dot of either color. Now, the color still tells us the direction, up or down. Blue is up, red is down. But the thinness of the dot is telling us that there are lack of probabilities, that we have less statistical advantage there. So most of the time, if it's a thin dot, if it's an unconfirmed climate, we choose to do nothing. We don't do anything on those days. We only want to be trading when we have statistical advantage. So in this case, we have a thick blue dot, confirmed upwards climate, probabilities to the upside. In terms of closest stacks of orders, we have our closest buy UFO just here, 3509.73 to 3493.25. That's the closest stack of buy orders as highlighted to us there by our green UFO. Now, we don't have any sell UFOs. That's why this is blank on the newsletter. If there was price above us, we might be able to show you sell UFOs, but we're at all-time highs. So there's no price above us. There's no market data above where we're at now, which means we have no information for our sell UFOs, for our sell orders. So for now, confirmed upwards climate, probabilities to the upside, and buy UFOs beneath us. So that might sound good in terms of probabilities there to the upside. However, we do need to bear in mind the propagating. So what this number tells us here on the right-hand side is that normally the S&P would go up for 10 candles on a daily chart. Now, I'm just rounding that number up. So I know it's 9.14, but I'm just rounding up. Whatever the decimal place is on the right-hand side, I'm still just going to round it up. So effectively just add 1. So normally the S&P goes up for 10 candles, and we're on candle number 24. So that shows us that we are quite severely overextended, more than twice overextended what normally happens in this market. So we've gone past what's statistically likely. Now, the more we go past what is statistically likely, the less likely we are to keep doing that. You pull an elastic band and keep pulling, the less likely it is to allow you to keep pulling, and the more likely it is to contract back on itself. So again, this is what we would expect in markets that are overextended. If it's gone way past what is probable, we would expect that that climate would stop and turn. However, we don't have any sell orders above us to push price back down. So we're kind of, probabilities in different areas here. We have confirmed upwards climate, probabilities to the upside, no sell orders, and a bunch of buy orders beneath us. That's all signs to the upside, but do just bear in mind, we are lacking probability of a continuous move to the upside based on what normally happens in this market. So in terms of volatility, we look at VIX.X, that gives us the volatility expectation on the S&P. And we can see from that we would expect a movement up or down in 1 year of 25.82%. Now, what that means is in 1 day, we expect a movement up or down of 57.36 points. In a week, 126.27 points. And in a month, just about see that there, 262.86 points. So that's the movement that we expect on the S&P within those given timeframes, up or down. Okay, so let's move on to the next market. Let's look at oil. We're going to look at CL. That's the continuous futures contract there for oil. So I'm just going to squish this down because the UFOs are quite far away there. So we see on our Auto Climate app at the bottom here, it might be a little bit hard to see. There's a reason for that. It's a thin red dot. So it's red, that tells us it's a downwards climate. However, it's a thin dot. That tells us that we have an unconfirmed climate, lack of probabilities, lack of statistical advantage. So we show you that here on the newsletter. So it's a downwards pointing arrow, a red downwards arrow, but we've put a little cross next to it. That little cross is the newsletter's way of telling you it's an unconfirmed climate, which normally means keep away, don't do much. Now, in terms of stacks of buy orders, we have this one here, 26.31 to 25.80. We'll see it's just nestled on top of another one there, 2 buy UFOs on top of each other. Closest stack of sell orders is here. That's shown by our red UFO at 53.83 to 55.71. And as we can see, we're kind of in the middle, not really close to anything. Price hasn't really done much for the last few weeks. We haven't really been close to stacks of orders. This can mean that we could see price shoot up, we could see price shoot down. There's nothing to stop it on a daily chart, no orders close by, but it's also meant that we haven't had any real push to either side for the time being. So at the moment, not close to any stacks of buy orders or sell orders. We've got an unconfirmed climate, so again, no real push one side or the other. It would be better to keep away from oil. Now, in terms of propagating, we would normally expect oil to go down for 8 candles, and we're on candle number 2. So we could expect that the price of oil could continue to go down for the next few days. But again, bear in mind, we are lacking probabilities for that to happen. So in terms of volatility, how much we could expect oil to move, we look at OVX.X, and we see from that we expect a movement up or down in 1 year of 31.74%. That means in a day, we expect a movement up or down of 0.86 points. In a week, up or down of 1.889 points, and in a month, a movement up or down of 3.94 points. So again, that gives us the expected movement there on oil within those given time frames. So next market, we're going to look at gold. That's at GC. That's the continuous futures chart, once again for gold. So I'm just going to move that a little bit. Okay, so we see here, we have a thick blue dot on our Auto Climate app. That tells us we have a confirmed upwards climate. We show you that here on the newsletter by a green upwards pointing arrow. So confirmed upwards climate, probabilities to the upside. Closest stack of buy orders is here. That's highlighted to us by our green UFO, 1836.7 to 1825.9. Closest stack of sell orders, that's here by our red UFO at 2039.7 to 2060.8. So we have a confirmed upwards climate, probabilities there to the upside. And normally, gold would go up for 6 candles in a row. And we're on candle number 2. So we also have probabilities of a continuous move to the upside, at least for the next few days. So it looks like on gold, we have more probabilities there to the upside at the moment. We would expect a continuous move to the upside based on statistics. Again, just because it's statistical doesn't mean it's definite. So please manage your risk just in case. But again, probabilities there to the upside for the moment for gold. Okay, so when we look at the volatility for gold, we use GVZ.X or GVZ.X if you want to say it properly. And we see from that the expected movement up or down in a year is 23%, which means in a day, an expected movement up or down of 28.5 points. In a week, 62.7 points. And in a month, 130.6 points. So that's gold. Let's look at the last market, last but not least, the euro US dollar. That's the spot forex currency pair. So it's the euro versus the US dollar there. So I'm just going to squidge it down. I think I might need to load more on it. That's fine. I'm going to squidge it a little bit more. In fact, I might make price a little bit closer together. There you go. So we can see everything we need to see. Okay. So on the euro US dollar, once again, thick blue dot, confirmed upwards climate, probabilities to the upside. Closest stack of buy orders is here. We're in it at the moment. Price is in it at the moment. So the range of price there is 1.1835 to 1.1762. Just rounded that to where it needs to be on the to the pip, to the closest pip. We can see here we've got a bunch of buy orders beneath us. So loads and loads of stacks of orders, lots of buying pressure underneath us. In terms of the closest stack of sell orders, it's this one up here, this red UFO, 1.2344 to 1.2414. Once again, just rounded that to the pip that it needs to. So we've got lots of pressure underneath us to the buy side, lots of buy orders underneath us. We have a confirmed upwards climate. We also, in terms of propagating, would expect, I'm just going to do that again, would expect another at least day or two of a movement to the upside, because normally the euro goes up for 5 candles on a daily chart and we're on candle number 3. So we've got statistical probabilities of a continuous move to the upside at least for another day or two. We have a confirmed upwards climate, so probabilities to the upside there as well. It looks like we're also close to the EMA for those that track that. And we've got many buy orders beneath us. So again, signals there to the upside. However, like we said, not definite. Please manage your risk. But again, just showing there on the euro, what the technology is showing us that we have probabilities to a move to the upside for the euro. So in terms of volatility, we look at EVZ.X, and we expect a movement up or down in 1 year of 8.25%. That means in a day, a movement up or down of 62 pips. In a week, a movement up or down of 136 pips. And in a month, a movement up or down of 282 pips. So again, the volatility numbers give us an idea of up or down, what we can expect in terms of movement in these markets. The climate and propagating, these give us an idea of in which direction we're likely to see that happen and for how long. And then the nearest UFOs tell us where price might be likely to turn and change direction, or give us more orders to push it in the continuous direction it's already going in. So again, we're using technology and statistics here to put as much on our side as possible and be as objective as possible when it comes to what price is likely to do. Okay, so that's all the direct forces. I'm just going to make this bigger now. So direct forces, what we mean by that is buy orders and sell orders. Those are the most direct forces we can have in the markets to move it up or down, buying and selling, buy orders and sell orders. So we see that with our UFOs and we see that with the pressure there on the climate, up or down. However, of course, there can be many reasons as to why we have buy orders and sell orders. So we do need to understand indirect forces as well. So for us, that's news, that's expected news that we have. Now, just to show you what we do, we go to fxstreet.com/economic-calendar. Once you're on that link, we filter by high impact news and by US markets. So of course, if you trade outside of that, you can change the filters and look at what suits your trade plan a bit better. But for us, that's the filters that we put on. Now we can see that today, Wednesday, September 2nd, I don't know why that's weird there. We have some news coming out today. So to bear in mind with that, we have ADP employment change. So that could cause some volatility there in the markets, bring orders into the markets. We'll also see as well, so from yesterday's, from yesterday's and Monday's newsletter, we didn't have any news on Friday, but we now have non-farm payrolls expected on Friday. So that normally causes a little bit of movement there in the markets. So just bear in mind that usually on the left-hand side, you'll see the time of day that that's due to come out. So just bear in mind, it might be bringing orders with it and it could make price do something unexpected. Of course, these are the scheduled reports. Again, of course, sometimes things happen in the news which are unexpected as well, which again, why we always need to manage our risk. Now, once the information comes out, it will be in this actual column. So you'll see here, there's some data there, and these are all blank. That's because it hasn't happened yet. And that's why it's blank. We don't know what's going to happen. Once that number comes out, usually it will be filled in here in the actual column. So you'll be able to see whether it was better than expected or worse than expected based on the reporting that happened. Okay, so that's everything for today. Just a reminder for those guys that are joining us from within Tradictive, you have your sessions today, futures at 9 a.m, options at 1 p.m. Eastern, so we'll see you then. Also at 4:15 p.m. Eastern, my colleague Boyan will be looking at what did happen in the markets, what went as expected, what did the news do to the expected movement in the markets. Did we go in the direction that we expected? What can we learn and build on for our trading moving forwards? For those that are joining us from outside the Tradictive channel, just to say you can join us if you'd like to in our futures, options, stocks, investing, psychology, sharpening sessions, plus the support as well. You can join us at tradictive.com/you-can-trade. Now, I get that there are loads of places out there to learn how to trade. It can be really hard to figure out which ones are going to be best for you or which ones suit the way you think best or the way you trade best. So you can try us out for a couple of weeks. You've got free 14-day access. So try us out for a couple of weeks, see if it works for you. If it doesn't, no problem. You cancel the subscription. If it does, then you've had a good couple of weeks to try it out and know that it does actually suit you. In terms of classes, so for those that might want to learn a bit more about backtesting, about trading plans, about futures or stocks or psychology, again, a really big one there. If you go to tradictive.com/ whatever the class is, so in this case, backtesting live, or you could do futures live or stocks live, psychology live, trading plans live, and you can learn more about the classes that we do. The next upcoming one is backtesting. That's why that link is there. So you can learn about the backtesting class. That's on September 19th and 20th. 18th and 19th. It's that weekend. I might have got the dates wrong there. And again, just to say, you can register for any course and get an additional course for free. So it's a buy one, get one free situation, although the second one you pick has to be of equal or lesser value than the first one. So go to the website, see what we do, see what courses make the most sense to you, see what ones you want to do, and then put it together in such a way where you get the most out of that deal and you get the best out of it. If you have any questions on anything, not just courses or subscriptions, but on anything I've covered today, on technology, anything trading related, you can email us support@tradictive.com. Otherwise, we'll see you guys within Tradictive in the sessions today. Otherwise, I will be back tomorrow morning. So I'll see you guys then. Have a good day. Hope the markets treat you well. And I will see you tomorrow. Take care. Bye-bye.